Okay. Good. We're going to get started this evening. Welcome everybody as you come in one by one. Hopefully, the plan is for this to be a short-ish session to get us started with the week. I am going to run through a couple of things that I'm looking at this week as we go into the week. And then we are going to see if we can develop some scenarios, some potential trade ideas on 3 pairs going into the week. And then we can all call it a night. So as usual now, today I'm going to do a little bit less teaching, especially at the beginning. I'll mix in a couple of concepts as we go along. But primarily, my focus is on showing you what I do on a Monday. So how I get set ready, because I don't trade on Mondays, partly because it's the only day I can get a rest from all the other things that I do. And also because it is typically a day where I like to sit down and figure out what the markets are doing. So as usual, I'm going to start with my dollar index. I am primarily a majors trader, meaning I trade primarily the 7 major currencies against the US dollar: GU, EU, UCHF, UCAD, AU, UJ, and NU. And if you're a new student and you're wondering what is he talking about, well, it's the first, let's see. If you look here, so these are, well, 5 of them. That's UCHF, GU, EU, USD, JPY, UCAD. The other 2 are AU and NU. And so together they make up the majors. And I trade them, like I said, 75% of all currency transactions happen involving a pair with the dollar in it, or happen across pairs involving the dollar. Also, they're good for liquidity, they're good for stops, or spreads, sorry. All around, you just want to be trading majors, in my opinion, especially as a new trader, until you figure out what you're doing on the cross pairs. So here is my chart. Start the week. I will always start with uh, the dollar index, and primarily I am an intra-week trader, meaning my reference chart is the 4-hour chart. So I'm going to go down from the weekly to the daily to the 4-hour, and then to the 15 and 1-hour charts to spot what I want to see. So first of all, before I go any further, let me take this off. I use this for a teaching prop. Actually, I'll leave that on because I need to. Just going to leave that on real quick. Delete that. So I'm just going to leave that on. I'm going to start with a brand new chart. Right, so file, new chart. Actually, this is open, new one here. I want the dollar index. I'm going to put my template on it. So a template is pretty much how you can set up a chart to look every time you open a new one, colors, sometimes indicators, things of that nature. I'm starting with the 4-hour because this is my reference chart. So first of all, I want to spot what's been going on. Now, I do know what's happening, but just in case I didn't realize what was going on, if I hadn't traded for a few weeks, this is what I would do. So look at what's going on. So straight away, I can see a couple of things here. First of all, I can see that there's been a market structure break on the 4-hour and the dollar index. That's the level prices dip beneath it. Secondly, I'm looking at the chart. Okay. So in essence, I am in a much larger range. We're going to look at the range in a second. I'm in a much larger range. But here at the moment, this is what's kind of happened. Price hit that expansion. It's found resistance at that level of premium, and then it's come all the way down here. This is a very wild expansion. It ran away really quick. So there's been a significant dump in the dollar over the last few weeks. Each divided is a week. And so I expect there to be some level of activity to get back in that range, even if it's going to go further down. This has been a very quick runaway of price. It needs to find some equilibrium somewhere. Now, if I draw that from there to there, an entire leg from there to there, at the moment, we're down beneath the 21.4. So we're in an area of deep discount. So if that's a kind of range, I am going to expect price to at least get back to roughly the fair or the average price range here. Again, I wouldn't be surprised if it hits this spot here, the sweet spot between 78.6 and 61.8. So I'm building a set of principles to tell me what I think is going to happen. There's a market structure break on the north on the 4-hour chart. That's a bullish scenario. If you take the overall range, it's an area of deep discount. So that, again, is another bullish scenario. Price should be reaching up in there. The third thing that I'm going to take a look at here, okay, I'm going to leave that there, is write this down in your notes. When you see this happen on a 4-hour chart, two highs, not too far from each other, pretty much roughly the same level, pretty much almost the same level there. I'll take the dividers away. These are what we call clean highs. Now, retail traders call them double tops. We call them clean highs. There is a very good chance here. In fact, not just a good chance, there will be liquidity resting in that area there. There will be a liquidity pool, meaning POOL, liquidity pool. And that also means that there will be a liquidity pool, PULL, in that direction. Also, if you look at this here, there's an order block there. I'm going to take this away now that we've looked at where we are. So in essence, we know, you know what, if I take that away, I want to mark this, right. So that's the 61.8 Fibonacci level. So I can take that away. Right. So I'm just going to write something there to let me know what that level is. So when I see it on my chart, it makes sense. So 61.8 long-term fib premium level, right? I'll put that there. Text properties are gonna make that smaller. Welcome everybody. As you guys filing, just let me know who you are so I know who I'm. Well, if you're not a registered student, that's fine. Today's an open session, but if you are a registered student, let me know who you are in the comment section, just so I know to tailor my approach to who is on the call. If you make the time to be here live, then you should get the session tailored to you. I'm gonna put that in red as well. Okay, so, and of course, I'm also gonna put this here. That's the high of the range. And this is the low of the range here. It just helps me know when I'm down on a smaller level where certain ranges are. And I'm going to put what certain levels are. So I'm going to put that there. Sex properties. Controlling range high. And down here. So up there, controlling range high. And down here. Properties. Controlling range low. All right, so I'm forming so far, everything's telling me long-term for the week up. Now, this here is an order block. There is an intermediate liquidity level there that's been breached. So we have our 4-hour stop hunt if we want it. So that came into a level from last week. Now, however, there's another one down here. Good to see you, Gerard. Good to see you, Sonny. So there's another one down here. So price could do one or two things. It could just run up straight from there. And if it does, it's going to clean out, in my opinion, definitely clean out these highs into somewhere in that level. Well, what do we have in that level there? There's an order block here. It's a very large one, actually. Order block there. So that's my scenario one, just looking at this. My scenario two is it first comes down, breaches that level into this here. Now, there's two different levels here. There's one there, and there's another one there around the same level. So this is ones where you got to be careful. Which is it going to respect of the two? This one or that one, but we'll see. So I'm going to draw it into the white space. So that is where both of the other blocks converge. Just to let you know, it could be either of these two. And then run up into that level. So these are my two scenarios. These are my two scenarios. Come here. These are right. So there's one there, and there will be another one. Cool. So this is just quick. Now I can refine this a lot further, but just on a, looking at a 4-hour, this is kind of what I expect to happen, right? So for those of you just come in, just throw that Fibonacci on again. So we're in an area of deep discount on the overall leg so far. Also, if you go from here to here, if that was the expansion, this is a very wild retracement. So there should be some pullback somewhere near the middle. I have a bullish market structure break. This is why I went through the trouble of explaining all these principles to you guys last week. So you can see how, and I'm even taking more time to still re-explain some of them. But if I were just doing this on my chart without you here, this could literally take me 5 minutes and I'd be done with all this. All right. So looking at my 4-hour chart initially, everything's saying bullish for this week. Now I want to look at my weekly chart. So I'm going to open up a new, actually, just keep that up. Now I told you guys I'm going to teach on this later this week, that you want to have for each currency pair you're currently stuck in a trading or in a trade concerning, you're going to want to have 3 charts open at the same time, at least 3, a high, a middle, and a low one. So for me, the 3 are going to be the weekly, the 4-hour, and the 50-minute, the 1 hour. Or I can swap the weekly for the daily once I've seen what I want to see on the weekly. Now, so I'm going to open up another one there. Again, this is the dollar index. This is not a pair. I haven't started looking at the pairs yet. I'm just looking at what the dollar is doing. Remember from last week, Friday, the dollar is my reference index. It's how I figure out roughly, it's my filter. I've got other filters, open interest, commitment of traders report. That's beyond the scope of this session. But when it comes to technical analysis, the dollar index is my filter. So I'm going to pick trades based on what the dollar index is doing and how that correlates with the pairs that involve the dollar. So weekly chart. Boy, I'm going to have to, okay, that's fine. I'll just do it again because I did this last week and I can't find that chart. I think I closed it down by accident. So I'll just do it again. That's fine. So this is the dollar index. On the weekly chart, what's going on? Well, there was a market structure break. So I'm going to put that in there. So a bullish market structure break. Of course, a bullish market structure break on a weekly chart could take years to pan out. See, it started here. 1, 2, 3, we're in the 4th year. It could take 4 weeks on a weekly chart, 4 years, or 4 weeks on a 4-hour chart, 4 years on a weekly chart. It could take 4 days on an hourly chart. It could take 4 hours on a 1-minute chart, whatever, or a 5-minute chart. So the fact that this is overall bullish on a weekly basis tells us nothing because it's bullish over 4 years, but there could still be several pips of counter bullish or counter trend movement over the course of this week. So that's that. And of course, then this dipped down to that level. We had this, 1 second, another market structure break there. So another bullish MSB there. And then when that happened, price dipped back into this humongous, this is a humongous weekly order block. That weekly order block there is, let's see now. How many pips is that? It's got to be several thousands. That's actually, no, it's the dollar index. So we're not counting pips on the dollar index. That's fine. It's not an actual pair. And so long term on the weekly basis as well, we should be expecting a bullish move back into somewhere there's another block there. I'll take that entire one there. So that's reasonable to expect. So let's put the bullish MSB there. That's reasonable to expect. Overall, that would give us from where we are in price now to there. Again, sorry, you don't count pips on the dollar index. You're just looking for direction. So now, however, in this there is a smaller order block in there on a weekly basis that we're currently in at the moment. I'm going to draw this here. So we're in here. If this analysis is correct in a bullish sense, then again, that would be a good reason to expect to see some upward momentum. So somewhere, it could be this week, it could be next week, it could be the third week. But we're building a case. Our 4-hour chart is telling us almost everything saying bullish. Our weekly chart is telling us now, you got to take the weekly with a grain of salt, because the weekly could play out over years. So the fact that it says bullish on the weekly doesn't mean you just jump in and take a bullish trade. You need a smaller filter. Right. So what else do I want to look at on the weekly chart? Let me see. Notice I'm not drawing levels yet because I'm not picking out a trade. I'm just following a direction. And then on the daily chart, okay, so we've seen this. Aha, now this is something that I'm interested in looking at. I want to know why that daily low was not taken out. Because if you look at some of the dollar pairs on a daily chart, let's see. So this is EU on a daily chart. That's the same level there. As you can see, this one was taken out. Actually, no, it's not. Okay, so it's not. So it's not yet being taken out on the EU. So that's good. So in essence, EU is tracking with the dollar index on the daily chart. However, on the Swissy, and I know this painfully because I stubbornly held onto that trade just to see how it would go. My mom kind of kicked me my backside, asking why I was breaking my rules. I told her I was willing to sacrifice 1% just to see how it would play out because I was interested. But she's told me not to do that again. So, Mom, I'm going to listen to you. My mom trades, by the way. She's a member or registered student in our trading academy. But you can see that level was taken out on the Swissy. This is what one of my mentors would call, how did they call it again now? A crack in correlation. So one of the people who I learned to trade from, one of the most popular traders in the world, he calls this a crack in correlation. In that when two things that are supposed to be correlated break correlation, something's happening. So the question is, the Swissy took this out, but the dollar index did not take that out. And they're directly correlated. So whatever caused this in the Swissy was something that did not have to do with the dollar. Let me know in the comment section if you understand what I mean. If the dollar did not make a lower low here, but the Swissy did, the dollar Swiss franc, that's what we call the Swissy did, this here is completely related to the Swissy. In essence, once the Swissy has finished doing what it's doing, if the dollar moves, you should see some you should see a move in the Swissy as well. However, also, this could tell us that there is heavy downward pressure in the Swissy. So until we see a nice snapback, we might want to be careful. But you can see once it got down to this level, see that wild retracement on a daily. Let's look at the GU on a daily. 1 second. GU on a daily chart. Template, IKW. Yeah, on the daily too, the GU did not take that out. So we see that in the dollar index on the daily chart, that level there was defended, or at least so far has not been breached. The equivalent level, of course, when the dollar goes down, GU should go up because the dollar is the second. Think of this as GBP over USD. So if the denominator is going down, the overall fraction will rise in value and vice versa. So that lines up with that. And on EU, put that there. On EU, the same thing lines up with there as well. The only pair of the three we are watching that broke that correlation is Swissy, but there's a wild retracement here. So going back to the dollar, the question is, using a daily chart. Also remember, we're at the start of a month. Let's remember that we're at the start of a month. And if you think of it, every divider in the daily chart is actually, this was supposed to be weekly. So let's just leave it as weekly. And let's open a brand new chart for the daily. Let's open a brand new chart for the daily. Right, so this is the daily. Cool. So on the daily here, I can see that there is another block there. The question is, will that order block hold or not? Is that order block likely to be defended, or is price going to dip down into this one? The answer is, I don't know. Neither do you. And if anybody tells you they know, they're lying. We can guess educatedly. We can have a hunch. But nobody knows for sure what's going to happen. In fact, it could even come and clear this one out and come all the way down there. It could come all the way. Now, this is very unlikely. I do not believe this is going to happen. I would be very, very, very shocked. But it could. All we need is some bad economic news or natural disaster or another coronavirus issue or whatever. But I'm going to bet it's either going to come up from there or here. So this is where one of the rules that I broke a couple of times last week, and I've given you guys the rules before. I broke it because I was testing out something. The same way you guys are improving your trading experience, I'm trying to become a better trader myself. And so I'm now past, basically, I've taken most of the classes and the mentorship systems I want to take over the years. I've figured out how the markets work for me. Most of my development now comes with experience in the charts. So I'm trying to predict now. I'm trying to figure out a way to predict when there's going to be a daily engulfing. The daily engulfing is the most powerful directional bias tool in Forex. It's gold if you already have the other factors aligned. The problem is, how do you know when it's going to be a daily engulfing? Sometimes you lose hundreds of pips or 100 pips or more in the day of the engulfing. So I've been trying to predict. I think I got about 65% right last week in terms of predicting the daily engulfing. But I'm going back to the way I trade, which is very conservative. I'm going to wait for a daily engulfing on the dollar index. And for those of you who are not in that class, an engulfing is simply this. You have a candle going one way. This candle, for instance, right? That's the body, or you could just drop with the whole candle in the wick. When price reverses the other way and clears out the high of that candle, that's an engulfing. So this here is a bullish engulfing because price is going down, then bullish. It went up and it cleared out that previous candle. That's a bullish engulfing. On the flip side, this here is a bearish engulfing. Price is going up. It gets there and reverses against it and clears out that candle. That's a bearish engulfing. In essence, this is an example of one that happened recently. This here was a bullish engulfing. Now, the testing I've been doing over the last week was this. When I have a bullish engulfing and a market structure break at the top of that bullish engulfing, see, that's a market structure break there. My test was, and I might still test it out again this week if my mom doesn't kill me. My test was, can I trust that this engulfing here and this market structure break means I can trust this order block? In essence, I don't need to wait for another engulfing here. The moment it comes down in there and reaches halfway, which is roughly there, if I just use my eyes, that's roughly halfway, 50%, which is, so I have different kinds of lines for the different things I do. So this is a daily order block. So my daily color is green. My daily color is green. 1 second, guys. That one of my sons, let me see. Yeah, sorry about that. One of my children came in, and I like to not ignore them, whatever I'm doing, so they know they're more important than my work. So for an order block, that would be green because it's daily, and I would make the line look like that. So this is my order block line or my level line. It just tells me that that's a fair value line. So what I've been testing the whole of last week is that I should be able to theoretically 1 second, insert indicator, pre-order tool. Where is that? Custom pre-order tool. Risk 1%. 10. Entry line should be blue. Stop loss line red. Profit line green. Yep. So I'm now going to save this template. So I don't need to keep doing this every single time. So I'm going to save the template under that same name. Save. There we go. So the argument is, use this because it's not a tradable pair. I should be able to put my order in there, put my stop loss there if this was a real chart and whatever. But I'm going to wait for the engulfing this week. This week I'm trading an account that involves money from other people. And so when it's other people's money, I'm a lot more careful. So I'm going to wait for the daily engulfing. But if I see an engulfing, in essence, say for instance, I see this price come back out tomorrow and clear that level there, that will be the engulfing. Or it could be Wednesday, in which case it will engulf Tuesday's candle. But whatever, I'm looking for a sign here or here. That level there looks very suspicious to me. I don't know why, but something, it might not be, but no, I don't know. I just feel like maybe I should wait till it gets down in this level. So when I see my daily engulfing is when I'm going to go. And that will be my sign that my bullish predictions have panned out. So that's the dollar index done. I could have done that in 5 minutes, but I took the time to explain. Now, so I'm just going to put this here. So that's the dollar index charts. That's the weekly, daily, that's the 4-hour. And once the setup starts to pan out, I will then open another dollar index chart for at least 1 hour, 15 minutes to track what's going on as we go through the week. 1 second. This isn't the one I was just working with. No, not that one. Not you. I want you. Yep. So that's the dollar index. Now we go with the pairs we're tracking. So let's start with EU. And again, ignore these ones, all these here. They're all there for a reason, except for, yeah, they're all there for a reason. So many open brand new ones. My charts look like my browsers. I've got like 50 windows open on my browser sometimes. It's just ridiculous. So let's start with EU. So what we've just done is we've established a bias. We think we're expecting a bullish week. We could be wrong. If we are wrong, we'll pivot. But we think there's pretty good reason to expect a bullish week, in which case we're waiting for bullish signals to let us know when we're good to go. That's on the dollar index. So if, 1 second, sorry. Delete and delete. So we will then save template as IKW. Right. So there we go. So if we think, well, if we're looking for excuses to be bullish on the dollar, and somebody may write me an email or send me a message and say, oh, but I'm looking at the same charts and I'm thinking so, that's fine. There's plenty of movement depending on whether you're a scalper, an intra-week trader, an intraday trader, a swing trader, a position trader, whether or not you're whatever. Two of us can look at the same chart and pick two different trades in the opposite directions that will both win. That's the beautiful thing about trading. It's like reading the Bible sometimes. You can look at the same Bible verse and come up with two different but still valid, theologically valid interpretations, as long as they don't contradict. So this is what I see when I look at the chart. And I don't have to be right. I just have to be humble enough to admit if I'm not right. Cool. Now, also, quick one. If you remember, I gave a trade at the beginning, or was it 2 weeks ago, that talked about price clearing out that level and coming into here. I wish I held on to it long enough, but indeed, this was my, remember, I put this here. This was supposed to be my exit here. Well, we got it and we passed it. Anyway, just to say, sometimes I wish I would hold on to my own trades longer. So we're going to do the exact same thing we did on the dollar index and see which of the three pairs on our watch list are lining up with the dollar index. So start with the 4-hour chart. Now, EU is in a 4-hour consolidation. It's been held in a range. Where is the range? This is the range. When I see a consolidation, my thought process is, one, trade it from top to bottom, but secondly, wait for a breakout. And sometimes it's a manipulation, then breakout. So it could do this. For instance, it could just pop out here. Now, if the dollar is rising, we expect EU to fall, right? This could just pop out here, clear that out, and then drop like a stone. That's one scenario. Now, I'm not going to bother doing this. See what I did here? That's an example. I'm not going to do this on every single chart. I'm only going to do it on the ones that I think I'm going to get a trade on, and I might not even do it because of time. But the same process is what I would do on this. So that's scenario one. Scenario two is it could just go straight if it's going to line up with the dollar index. Of course, there are scenarios where it goes the other way. It could just go straight. Scenario three, if we're going with the dollar index being correct, or our prediction of the dollar index being correct. Come on. This is the bit about MetaTrader I hate. It can be very glitchy. Scenario three, which is something you'll see plenty of times in trading, is it does this. So either of these two, but then it comes back into the zone after it's left the zone to roughly the middle of the zone. Now, this is a 4-hour chart, so my color is going to be purple. Same kind of line, but purple. And I want to find the middle point of the chart. How do I do that? Just drop a Fibonacci, and where does 50 turn up? Oh, look at that. That was perfect for me. It happens over time. Your eyes just see these things. So it come back somewhere in that range and then drop down. Everybody, just let me know who's in, which of the registered students are in, so I know who's here, so I can tailor my teaching to factor in your experience level. And there's that there. Yeah, now, of course, there is this low here. If we're going with the dollar index, we expect that to be taken out at least. Now, let's look. The last few weeks, we've had very low pip ranges. Like last week was a very low pip range. This is a sign when the consolidation starts narrowing, it's a sign that the breakout is coming. If the dollar index is correct, then this is the manipulation to really drive price down, in which case we expect it to at least take out that level there. If we do, where's the immediate next liquidity profile? In this case, an order block. It is here. See that there? It's there. So, which is why I came up with this as a potential idea. Now we're going to do the same thing we did here for the dollar index. Okay, I've taken off the Fibonacci for that. That's fine. But if you rewind, you'll see it. It's going to go there, and I'm going to draw Fibonacci from the current controlling low to the current controlling high. In this leg of price so far on the 4-hour chart, that's the controlling low. Wrong. Old habits die hard. We're going to go from high to low. So where are we at this point on the Fibonacci? We're in an area of high premium. Can you see this? In this range, we're at the 78.6 level. So we're way above 50. We're way above 61.8. We're in a high premium. So you see, this is all lining up now. The same way when we did this for the dollar index, we drew the Fibonacci. I'll put it back so you can see it. But that's why we drew this levels there. So that's the controlling high. That's the controlling low. This is the 61.8 level, right? And we said here we were in a very low area of discount, in which case we expected market makers to buy at a discount. Well, as we would expect, if there's no crack in correlation, like my mentor would say, we are in the inverse here, a high level. So since this is playing out, I am now going to drop this line there. So we can take that away. Now it's going to be red. If it's a Fibonacci line, it's always going to be red, regardless of what level I'm on, what time frame I'm on. And it's also always going to be full. And then we'll drop another one here. And now I can take this away so it doesn't distract. So it's a lot cleaner. Actually, I need that back real quick. High to low. I need my 61.8 level. Why? Anything above 61.8 is real premium. Anything below 38 so is premium. Anything below 38.2 is discount, but the 21 and the 78 are the real high levels of premium and discount. Also, let me put this in here. Look at this here, right? Look at this. Very near the center of this range here is the 78.6 level. That is interesting to me. These are the ways you begin to stack ideas that give you a high percentage prediction of what you're going to see. So I wouldn't do this if this was just my chart, but because you guys are looking at it, I am going to do it. So that's controlling range high. This down to 12 and also to red. Right? That's the controlling range low. See what cadence did I use here? So 61.8 long term, that's fine. Here, I'm just going to put the figures. So this would be, what have I just done? I believe this would be 21.4. Just get that fib back one more time. Why don't you just leave the fib? Well, because it looks messy when you, so yeah, okay. So yeah, that's fine. The fib just, to me personally, it makes my chart more cluttered. And so I want to, no, I need that fib one more time. It makes my chart more cluttered. And so I just like to take it off and leave the lines. That makes me see clearer. But if you don't mind the fibs, do you. Whatever works for you is fine by me. Okay, so you know what? Might as well just put all the levels there. In which case, then you're probably asking, why don't I just leave the fib? Well, at this point, perhaps I should just leave the fib, but I'm going to be stubborn. I think this is still a little bit clearer. 38.2. This is 50. Notice I'm drawing these levels out on my 4-hour chart. There's a reason for that. If I don't get to it today, I will in the future. 61.8. And of course, this is 78.2. Get someone to design me an indicator that means that I can draw these levels out without a normal fib. Anyway, so that's that. And you notice that there's certain levels here, interestingly, that just line up with the fibs. Look at what's happening at the fib levels. You can see all the blocks forming. That's the beautiful thing about Fibonacci. Fibonacci's are the one thing about trading that I don't have a scientific explanation for, other than premium and discount, why these exact levels work. But they show up all across nature. So yeah. Anyway, so this is what I'm thinking is going to happen. Now, if I enter insert, no, what am I doing? Sleepy EU. So that's the 4-hour. Actually, let's see what else I want to look at in the 4-hour chart. So I would like to see this level breached, right? That level there, I think, is the daily level. Yes, it is. So that's the daily level there. I would love to see a stop hunt do that. I don't need to. If I put the dividers in, there's been a stop hunt here, right? So this could be the stop hunt that drives price down. It could be this one. But this would be perfect. I would love to see this. This would be ideal for me. And if it lines up with the same thing on a dollar index, gravy. Now, I'm also going to look at the daily chart. And this is what you see on the daily. So market structure break there. Price has gone up and it's forming probably a 38.2, I think, actually wrong way. So 61.8 level retracement there. Let's see. It looks like a 61 to me. Yep, 61.8. So, and we have had on the daily, we have already had, actually, so we've had a what you call it now, an engulfing up. So this is the way you now have the question. Under normal circumstances, this here would say to me that this is bombs away. And bombs away on the daily chart would be, to me, to clear out that level. Get rid of the Fibonacci. To clear out that level. However, there's an order block here. And we're already in the order block. So if we are to follow our dollar index idea, which is we're waiting for daily engulfing in any of these two levels and up we go, of course, we could come down here into here, which would be the same as clearing this into this. But looking at the 4 hour on a daily, on the 4 hour, let's see. We haven't yet reached the middle point. So let's see. I'm just going to guess that this is roughly the 50 level in the order block. I could be wrong a little bit. So this is a 4 hour level. So purple and my order block. There we go. Yeah. This is what I would have my money on. So let's take away that level there. So you can see clearly there's another block here. If you assume that that's roughly halfway through, that to me, so I'm going to let me just start taking a couple of screenshots here because I usually forget to do that. So I can post them in the Telegram group. But of all these scenarios, this is the one that I'm liking the most. Of course, now it could do this and then come up. So this here could be a variation of this. But I'm liking that. I might be wrong, but that's what I'm liking, especially after seeing Monday. So Tuesday and Wednesday, I'm going to wait for daily engulfing. I'm going to be patient. I'm going to wait for it. It may mean you lose a few pips of the trade that you could have made if you just walked in straight, but it'll save you from losing money. So I am going to wait. And remember, if we are expecting, actually, before I form that, let's look at the weekly. Because I haven't seen the weekly here. Let's look at the weekly on EU. Are you guys following me so far? Have I lost you behind? I'm being very quick with this. This is how, if I was trading on my own or I was dealing with very experienced traders, if, say, for instance, Tuckway and I were having a weekly analysis session, we probably have finished this in about 45 minutes. But I'm trying to take time to show you step by step what I'm thinking and doing. But if I'm losing you, please let me know in the comment section. So on the weekly chart, and I've drawn this a billion times, I'm probably going to keep this one as a picture. There's a gap there. Remember, we looked at this. There's a gap there. Price came into the gap. This is the weekly current controlling high and low. You draw it from high to low, controlling high and low. When an area of deep discount, price has rallied once. It's taking out an order block there, or a market structure break, sorry, there. It's rallied again into this. This in itself is an order block. If you drop down, you see this on a daily chart. You see that lines up almost perfectly with that there. How did I know? Well, when you see a large rejection area like this in a higher time frame, it's usually an order block in there on a lower time frame. And so 1, 2, 3, 4, 5 weeks, price has been held up here. So while long term, we do expect, and long term could be over years, we do expect price to reach, and of course, one second, let's see. Since we're in an area of discount, we would like to see some buying at a discount up onto, say, at least this level here, or maybe even this one. So there's a nice order block there that coincides with that level, as you can see. So I think at some point over the next year or two, barring economic meltdowns, we should see that happen. And then if that gets cleared, and this could take years, like I said, this could be years, it could be months if something spectacular happens in any economy, good or bad, maybe get there as well. However, in the short term, this to me, we've not revisited this order block here on a weekly chart. We haven't revisited that order block there. To make it clear, it's weekly. Let me change the colors. So for weekly, let me see now. I use Saddle Brown. Where is Saddle Brown again? Saddle Brown. I can use Sienna. I've been cheating the last. Okay, I'll just use Sienna. Basically, a dark brown color. And so I think we're due a trip down into that order block. I think that's the first order of business. And then once that has been completed, then we should see a rally to that level. So over the next 6 months or 3 months, or it could be less, 3 to 6 months or more, I think that's what we're going to see. But in the interim, that looks like it should come down. So this, we've already come, if you look at this here, we've already come midway into this order block. So this is all lining up for me. I think we're going to have a down week. I could be wrong, but that's what I think. So that's the case. And on the daily, I'm waiting for daily engulfing. So I'm going to insert. 1 second. What am I doing? Insert. Wait for daily engulfing. Between Tuesday, London, and I would say Thursday, midnight. But I'm really waiting for this to happen on a Tuesday or Wednesday. And to make it clear, 1 second. Who's calling me? I will call you back. In bracket, bearish. Right? So that's what I'm waiting for. Could be wrong, but that's what I'm waiting for. And then going back to a 4-hour chart, if I get in somewhere in this region here, just off the 4-hour chart, I'm looking at, let's assume I get in here. This high is the first target objective. Write that down. You want to have what we call target objectives, meaning at what points should I start coming out the trade? That's target objective 1. That's 180 pips. If all price does is come back down to this low this week or somewhere in this region, you could have anywhere from 150 to 180 pips. If I get that trade at 5 to 1, I'm done on EU. If I get in and I get here and I don't see any further signs, if say by Thursday evening, we're still in this region here and I've made 150 pips, I am Audi, right? I am out faster than you can say Bob's your uncle. I'm banking my money. I'm buying myself an ice cream and I'm chilling. But it could go further. Now, how will I know how to frame my trade? What happens over the next 2 days will let me know, because I am going to be dropping down on this same chart here. I'm going to be dropping down to a 1 hour and a 50-minute chart as the days go on to give me a refined entry. Especially, I'm going to be looking for a 1 hour engulfing in London or New York, 6 to 10, 10 to 12 to 3 on a Tuesday or Wednesday. And I'm going to be looking to use this daily pattern I told you about. If it's so I'm looking for a down day. On that down day, I expect price to open. Let's assume it's Tuesday. Let's assume it's going to be Tuesday, right? Then I would expect price to, actually, I think this might be Wednesday, but let's see. It could be Tuesday. Expect price to open up here. It could come into this region or above here, but whatever it does, I want it to open up, rally to an area of resistance, drop beneath the open price, right? And take out a daily engulfing. So if it's Tuesday, that would be here. I suspect it could be Wednesday, in which case Tuesday still goes higher. So if that's going to happen, then we would see Tuesday open up here, drop down into this level, and then push up higher. So we could see this happen on Tuesday. 1 second. I would not be surprised if this happened on Tuesday, aka tomorrow. The price drops down here. And then rallies into that level that we see there. That would not surprise me. Take a screenshot of that. And then if it did that on a Tuesday, let's assume that this was the low on Tuesday. So if I did that, and let's assume this was the low on a Tuesday, right? So if it formed this low tomorrow, say early in the morning or in the mid-afternoon, and then rallied higher into that level there, then on Wednesday, we would need price to close beneath that level. So 1 second. Let me see. So let me draw some imaginary daily candles. So let's assume that this is what happened on Tuesday. That this is the Tuesday daily candle. So we're talking about a daily candle now. If this was the Tuesday daily candle, meaning price came in there and rallied into that level, so it came up there, right? Then I would want to see this happen on a Wednesday. This is what I would expect to happen on a Wednesday. Again, I'm drawing imaginary daily candles, projected daily candles. And this is what I would want to see on a Wednesday, right? So there could be an engulfing. Sometimes the engulfing happens in one day. If price shoots up there on Tuesday and comes all the way back down and clears that same level. So if this happens on Tuesday, price comes down here, forms that low and goes up, and on the same day comes all the way back down and closes beneath that level, that is still a valid engulfing, in which case you would have something called a hammer or a doji on a daily chart. Candlestick patterns, we'll talk about that later, where, let me see if I can find an example of one here. You see this here? This candle here is an example of a 1 hour candle where it goes up and it's actually no, but then it goes both ways there. So that's a bad example for one in just one direction. Let me see if I can find one on the daily chart. This one here, see this? Price goes up, comes back down in the same day. This is a sign that there is an engulfing in and of itself. Well, it's a 1 day engulfing. But anyway, I'd love for that to happen in one go on Tuesday, because it means I can get in the trade on Wednesday. But it may take 2 days to play out, in which case then Thursday would be the day for me to take this trade. So I would be in on a Thursday and either out on the same day on a Thursday, or I could hold it till the afternoon on a Friday with a very short leash. So that's what I'm going to be looking for in EU. Now, these are the Fibonacci levels. Where are the significant levels on a weekly and a daily chart? Very important. I'm going to draw them out real quick. Actually, let's go here. So let's go here to a daily chart and see how they line up. I know the chart's looking a bit busy. In fact, because it's looking too busy, I'll just take one more picture of this. And I will close down some of these things. So let's get rid of all this. I'm going to leave this here because it's a 4-hour consolidation middle. Get rid of this too. And this imaginary one too. I'm also going to, now that I've shown you that, that can go too. As can that. And that. I'm going to leave that there because that's this 1 hour order block there. So I'm going to leave that there. So go to a daily chart. What are those key levels? Now, these are from the 4-hour chart. So I'm leaving them there. What are those key levels? Let's just drop them real quick based on where price is. Now, this is the trick. Since we're planning for a week, average weekly range, let's say 300 pips. So let's add some, let's say 500 pips. If it's a really, really great week, but that's a really great week. No more than 500 pips above and below price, where price is right now. And no more than 3 months, which is 60 trading days. There's 20 trading days every month because you don't count the Saturday and the Sunday till Sunday night. So I'm going to count. So put my monthly dividers. This is the month we're in right now. 1, 2, 3 months before. Right? So this here. Now, because there's nothing in this region here, I'm going to go back even further. And I'm going to draw. Let's see. So 500 pips from here is where? 500 pips is roughly 500 actually. So that's above the chart. Okay, that's fine. And then 500 pips below the chart is, below price is roughly this. So everything's in play. Good. So watch what I do real quick. I'm just dropping highs, lows, and candle bodies. I'm going to turn them green to show that they came from a daily chart. And you see that some of them line up with the levels we've already drawn from either Fibonacci's or order blocks. It's nothing special, just highs and lows on a daily chart, right? Highs and lows on a daily chart. That's close. I'm not going to add that. This one's close. I'm not going to add that. This is boring. It's like, oh, I want to get to the real meat. Well, this will save your life and your money. I'm going to add that there. Even though there's a confluence, I'm going to add it there to show us that there is a daily level there. And there. What else have I missed? There's one there and there. That one, I'm going to leave that there. Another one there. 1 second. Right. I think we've caught most of them. And of course, there's one here. When we are trading during the course of the week, you will be shocked at how some of these levels are going to become prophetic. I don't know which ones yet, but you will see a couple of them look like price told us in advance what it was going to do. Looks like a mess now. Don't worry. So now I have my 4-hour bias, my daily bias. I have my plan for what I think is going to happen. For the rest of the week, I'm going to be keeping an eye on my hourly chart. If I see my signals happen at the right times of the day, the right days of the week, and in these areas, these levels here, now I'm going to add a couple to these on the 4-hour chart, ones that the daily chart did not catch. So I'm going to put the 4-hour level here. The higher the level is, the more significant it's likely to be. So that's why I want to know when I'm trading intra-week, what level it came from. So that's one there that wasn't caught. In essence, highs and lows, so that's close to that one. There's one here. Another one there. Another one there. I know this is a fib level, but just to show that there's a difference there. Right, I think that's about it in terms of, so look at weeks. Let's go back 12 weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So, yep, we're good. So this is what I'm going to be staring at for the rest of the week. Actually, 4-hour. Oh, yeah, there's one above there, obviously. This line there. And there is that one based on here. Cool. So that looks like a mass of lines, right? An annoying mass of lines. But if I was gonna, since you get a line and you get a line, put that one there. When you drop down to a 15-minute chart, you're gonna see how far apart these lines are. And if you just trade from green line to green line, for instance, if you get in here, so I call bus stops, and you get out the next green line, that's 40 pips. Look at that. Green line to green line, 40 pips. That could be all you need for that week at 4-1. Also, where the lines intersect with order blocks and Fibonacci levels, you start to see a powerful picture begin to form. So for instance, this is the 78.6 level there. There is a bunch of lines in that area. If I just enter a trade, say here, at this green line here, and I catch it down to another green line near the 61.8 level, that's 117 pips. This is good enough for me for this week. Look at that. If I catch a trade here when the engulfing happens, and I come out here or here, but I'd come out here because of this order block there, I am good. When I give you guys those signals, sometimes that are precise to the pip, these are the lines that help me make those signals that precise. They look like a mess on the chart. Relax. You'll see them play out during the course of the week. So that's EU. I'm going to leave it here for today. My assignment to you is, I've shown you what to do with the dollar index. I've shown you what to do with EU. Go and see if you can figure out similar trade ideas on GU. For instance, in GU, just quick one, we could see this here, run into that level. We could then run down back and take this out into this level here. So this would be a swing trade for a swing trader. In which case we're looking for an imaginary engulfing in that area. So if we draw shapes, we'd like to see if we saw a green up candle there, we would like to see it followed up. So if we saw a green up candle there, we'd like to see it followed up by a red candle there. Again, these are all predictions, in which case we will then know that the engulfing had happened, and then we'd be going down from there over the course of the week. If we went from here to here, that's 250 pips. Can you see that? It's 250 pips to play with. That in itself is amazing. If you drop down the 4-hour chart, so that would be your 4-hour stop hunt back down this way. In essence, you'd be hunting that level there and there. In essence, any trade that starts, if you start from here, you catch it from here to there. How many pips is that? Just here to here. How many pips is that? It's 294 pips. And if you went to a weekly chart or daily chart, sorry, you drew out those levels, a couple of them real quick. There's one here. This is daily, so green. Another one there and there. And you get the point. I'm not going to do all of them for you, but of course there's one there. Up here, also in the 4-hour chart, with the controlling high and the controlling low. That's the controlling high there. That's the controlling low here. Right now on the 6. So, okay. So on the GU, unlike the EU, look at this now. Look at this. This is a great example of a difference. On EU, we're already above the 78.6 level. So in a level of high premium. On GU, we're still below the 61.8. So we could potentially see price on GU, because GU is a lot more volatile than EU at the moment. This is then in play. So, there's no science to it, just a feel for the market based on experience. But this is now in play. because there's a green line there. That's the 78.6 level, which would give us a high premium from which to then sell. So this lines up perfectly with the kind of thing that I would want to see. So I'm calling this on GU. I might be wrong, but I'm calling the fact that we are likely to see this back into this order block here, at least this week, and maybe all the way down to here. So this would be my scenario for GU. You can do the same for Swissy. All right, you do the same for UCHF. So this is my assignment to the IKWA students. If anybody else is watching this, it's our free gift to you. But to the registered students, I want you to break down Swissy for me. So go try do what I've just done using the dollar index, right? I've done the dollar index for you already, but then using the example I gave with EU, I want you to go do it on the Swiss franc and tell me what you think is likely to happen this week. And send it to me at some point tomorrow. What do you think is likely to happen? I'll give you an example. I think there's a strong possibility we could see this into perhaps this level here. Why that level there? This is something I saw when I was analyzing. Well, actually, that's already returned to the gap, so that's fine. So we could see that. And then if we did see that, it might not come all the way down there. It may stop there. So it might actually be this level here. But we don't know. But do the exact same process again for Swissy, UCHF. Send me your charts. Now, don't put the charts in the group because everybody's charts are just gonna clog everything up. So send me the charts in Telegram, in not my personal Telegram, the Academy Telegram. So this one here, 1 second. So this is my personal Telegram, right? Okay, I'm going to send myself a 1 second. So that's the Academy Telegram. I'm going to send myself a message. There you go. I'm going to send myself a message. Hi, self. And then when I go here to my personal one, there will be a message for me from there. So whatever you saved the IKG phone number as, let me give it to you real quick. All right. Actually, no, I can just do that here. There we go. Keys Wealth Academy Telegram / WhatsApp. We've actually just changed that number. There we go. Actually, I didn't even give you the number. 1 second. That's the number you want. Send me your analysis there. Actually, let me just put this without the other stuff. Just send me your analysis there by Telegram. Please don't send it to me by WhatsApp. So I'm not going to take any WhatsApp submissions. I need to know that all the work is on Telegram. And I will let you know how I think your analysis is. Any questions? Any questions before we close tonight? I know there's a delay between my voice and you hearing me on YouTube, so I'm going to wait 30 more seconds. Actually, let me put this up here. So any questions? And if there are none, we will call it a night and wait and see what happens in the market. All right, I'm going to make the assumption that there are no questions. Going to make the assumption that there are no questions, in which case it is bye-bye for me. I will see you guys. 1 second. At 11 a.m. tomorrow, which is Tuesday. Okay, I got a question. All right, cool. Have a great night, guys. Enjoy the music on your way out if you want. And I'll see you at 11 a.m. tomorrow.